equities aren't the thing to look at. The thing to look at is gold and the dollar. The dollar's down 8-9% since Trump was sworn in. By the standards of previous dollar depreciations, that's actually not much. The fact that gold has hit record highs this year is telling you something important about the way at least some investors are thinking about the world. Finite supply is part of the reason for gold's enduring appeal. Of course, it doesn't pay a return. It's a zero interest-bearing asset. So you have to kind of assume that real rates are going to be negative on interest-bearing assets. Otherwise, why would you hold gold? The same applies to Bitcoin. You're assuming some upward trend in the price, which implies some weakening of the dollar because you're pricing both of these things in dollars. And I think if you're a smart investor over the last 5 years, you've wanted to hold both Bitcoin and gold because you want to protect yourself against what I'll call the nightmare scenario of a second 1970s. That's a world in which you have higher inflation, but you also have stagnation. So you have the nightmare combination of stagflation. Now, that's not, of course, the plan. What Secretary Bessent wants is to see a period of dollar weakness, but not elevated inflation, but actually rising growth and relatively low inflation. In this scenario, the benign scenario, you're really rerunning the 1980s. You'll remember that in 1985, there was a significant dollar weakening, the Plaza Accord, and markets took off. The US equity market took off. Inflation did not take off. It was an extremely good time, apart from a little nightmare moment in 1987. So there's a good outcome here, which is we get some version of the 1980s. The bad outcome is we get some version of the 1970s.